For decades, the United States has maintained a strong influence over Mexico, but significant shifts are underway, changes that most people haven't noticed. Mexico is quietly turning away from its historical dependence on the US and pivoting toward China. This is not speculation, it's happening now, and the consequences could reshape the global balance of power. For years, Mexico has been bound tightly to the US through trade, manufacturing, and politics. However, cracks are forming in this relationship. China's growing influence in Mexico is undeniable, and it's happening at an unprecedented pace. With the US preoccupied with internal challenges and global trade wars, China is stepping in and presenting Mexico with a compelling alternative. The US seems to have underestimated Mexico's ability to explore other options, and now it might be too late. China's involvement in Mexico is particularly evident in the electric vehicle (EV) industry. Chinese companies are making substantial investments in Mexico, building factories and introducing advanced technology that the US currently struggles to match. These efforts go beyond mere financial contributions. They're reshaping the automotive industry and positioning Mexico as a key player in the global EV market. Historically, Mexico has been a hub for car manufacturing, but China's investments are transforming the landscape. This isn't about a few factories, it's a comprehensive strategy to dominate Mexico's auto sector. Such developments could dramatically shift global power dynamics, with Mexico emerging as a major force in the EV market. While China moves decisively, the US is lagging behind, seemingly unprepared for this strategic shift. A critical component of this shift is lithium, a resource essential for EV batteries. Mexico possesses significant lithium reserves, and China is eyeing these deposits with great interest. Securing access to Mexico's lithium could enable China to control a substantial portion of the global energy market, a move that would not only challenge the US but also elevate Mexico's geopolitical influence. Mexico is now at a crossroads. Its long-standing ties to the US are being tested as it evaluates the broader opportunities presented by China. The US, embroiled in tariff disputes and short-term policies, offers limited stability compared to China's long-term investments and strategic vision. For Mexico, this is an offer that's becoming increasingly difficult to ignore. This isn't just a bilateral issue. It's part of a larger geopolitical shift affecting all of North America. The rivalry between the US and China extends far beyond trade wars. It's reshaping alliances and influencing nations across the world. Mexico, situated at the center of this conflict, is being forced to make critical decisions about its future partnerships. China's approach is deeply strategic. They see Mexico as a prime location for low-cost labor, proximity to US markets, and a chance to lead the EV revolution. Chinese manufacturers in Mexico aren't just creating jobs, they're defining the future of the global auto industry. Meanwhile, the US is preoccupied with internal challenges, leaving a vacuum that China is more than willing to fill. Mexico's growing alignment with China signifies a dramatic shift in its economic and political orientation. This isn't a minor adjustment, it's a significant move with long-term implications for North American trade and global influence. If the trend continues, the US risks losing its economic dominance over Mexico, a development that could intensify competition in both trade and geopolitical influence. The US faces a critical question: can it retain its influence over Mexico? The signs are troubling. As Mexico deepens its economic ties with China, the US is scrambling to maintain its foothold. Despite remaining Mexico's largest trading partner, the US finds itself increasingly challenged by China's expanding presence. The EV industry is central to this shift. With billions of dollars flowing into Mexico, China is solidifying its role as a dominant force in electric vehicles. While the US grapples with trade wars and policy debates, China is already building factories, hiring workers, and producing EVs for the global market. Mexico stands to benefit immensely, positioning itself as a leader in the EV sector with China's backing. China's investments are about more than immediate economic gains, they're about securing the future. Mexico sees this partnership as an opportunity for long-term growth and stability, something the US has struggled to provide in recent years. As a result, Mexico is increasingly moving away from its reliance on the US and forging new alliances. The implications of Mexico's shift toward China extend far beyond its borders. Latin American nations are closely observing these developments, and Mexico's pivot could inspire similar moves across the region. If other countries follow Mexico's lead, the balance of power in Latin America could shift dramatically, leaving the U.S. with diminished influence. This isn't merely about trade agreements, it's about global power dynamics. For decades, the U.S. has been able to shape Mexico's policies and agreements, but China's growing involvement is challenging that status quo. If China continues to deepen its ties with Mexico, the U.S. could face significant losses in jobs, investments, and influence, particularly in key industries like EVs. China's presence in Mexico isn't temporary. They're investing in a long-term partnership that benefits both nations. For Mexico, this means greater access to Chinese resources, technology, and markets. For China, Mexico serves as a strategic gateway to North America. This relationship is poised to redefine global economic and political landscapes for decades to come. The broader trend extends beyond Mexico. Across Latin America, China is investing heavily in infrastructure, technology, and manufacturing. As Mexico strengthens its ties with China, other nations in the region may follow, leading to a fundamental realignment of alliances and economic partnerships. For the U.S., this is a critical wake-up call. If it fails to respond effectively, it risks losing not just Mexico but also its broader influence across Latin America. Mexico's growing independence and alignment with China could mark the beginning of a new era where the U.S. is no longer the dominant power in its own region. In the end, Mexico's decisions will have far-reaching consequences. If the current trends continue, Mexico will emerge not just as a manufacturing hub but as a central player in the global economy, with China playing a leading role. The U.S. faces a stark choice: adapt and respond to these changes or risk losing a vital partner and a key piece of its influence in the Western Hemisphere. The stakes couldn't be higher, and the coming years will determine whether the U.S. can rise to the challenge or cede ground to its rival, China.